Jai Hind everyone. Welcome to my YouTube channel which is Explore Yourselves, Banking and General Knowledge, etc. Your next promotion is not just a step up in your career, it's a step closer to your dreams, your respect, and your financial growth. The bank promotion exams 2025-2026 is a golden opportunity, and I'm here to make sure you grab it with both hands. In this journey, we will learn smart strategies, master important topics, and tackle questions just like the exam demands. Remember, success doesn't come to those who wait, it comes to those who prepare. So let's start today, prepare smartly, and make your promotion in 2025-2026 a reality. Welcome to part 44 of my Part to the Corner Office 2025-2026 series, where we break down real bank promotion exam questions and give you clear, practical sample answers to help you climb the career ladder faster. The first subject for today is Bank of India's miscellaneous MCQs from Advanced. The first question is what was the primary driver for the evaluation of the Basel III Accord? Option A to simplify banking operations. Option B to replace current capital requirements with a more risk sensitive regime. Option C to reduce the number of banking regulations globally. Option D to promote the use of external credit ratings only. And the correct answer is option B to replace current capital requirements with a more risk sensitive regime. The next question is according to the document, capital charge for which risk is introduced in Basel II? Option A credit risk, option B market risk, option C operational risk, or option D liquidity risk. And the correct answer is option C operational risk. The next question is credit risk is defined as the possibility of losses associated with option A fluctuations in foreign exchange rates, option B downgradation in the credit quality of borrowers or counterparties, option C internal system failures, or option D changes in government policies. And the correct answer is option B downgradation in the credit quality of borrowers or counterparties. Next question is under Basel III, the capital to be maintained for credit risk is linked to option A, the bank's total asset size, option B, the quality of the bank's portfolio, option C, the number of borrowers, or option D, the age of the bank. And the correct answer is option B, the quality of the bank's portfolio. The next question is which of the following is not a component of credit risk management as per the document? Option A, credit appraisal, option B, measurement of credit risk, option C, setting interest rates for deposits, option D, monitoring and controlling risk. And the correct answer is option C, setting interest rates for deposits. The next question is the credit rating system helps in all of the following except option A individual credit selection, option B setting employee salaries, option C pricing, credit spread, or option D portfolio analysis. The correct answer is option B setting employee salaries. The next question is what is the primary purpose of calculating the probability of default? PD. Option A to determine employee bonuses. Option B for the calculation of regulatory and economic capital. Option C to set branch operating hours. Option D to for marketing strategies. And the correct answer is option B for the calculation of regulatory and economic capital. The next question is which of the following advances is not covered by the standard credit rating models? Option A advances above rupees 10 lakhs, option B education loans, option C mid corporate segment advances, option D large corporate advances. And the correct answer is option B education loans. The next question is what is the basis for selecting a credit rating model? Option A borrower's age, option B annual sales turnover, option C type of collateral, option D length of relationship with the bank. And the correct answer is option B annual sales turnover. The next question is as per the EASE framework, credit exposure should be classified into how many bands? Option A 3, option B 4, option C 5, option D 6. And the correct answer is option B 4. The next question is which model is used for accounts with a turnover of rupees 1 crore to below rupees 5 crores? Option A SCBL, option B SBS, option C SME, option D HLC. The correct answer is option B SBS. The next question is for financial assistance to NBFCs, which risk rating model is to be used? Option A SBS model, option B NBFC model, option C HLC model, or option D overseas model. And the correct answer is option B NBFC model. The next question is external credit rating needs to be obtained for all eligible accounts with a credit exposure of blank and above from the banking system. Option A rupees 10 crores, option B rupees 25 crores, option C rupees 50 crores, or option D rupees 100 crores. And the correct answer is option C rupees 50 crores. The next question is in the case of an individual borrower's death, who becomes liable for the bank's dues? Option A the bank manager, option B the estate of the deceased borrower, option C the guarantor only, option D the government. The correct answer is option B the estate of the deceased borrower. The next question is upon the death of a borrower, what immediate action must the branch take? Option A close the account immediately. Option B stop further drawings in the account. Option C transfer the balance to the bank's profit account. Option D write off the loan. And the correct answer is option B stop further drawings in the account. The next question is in a joint account for borrowings, all account holders must be made option A severely liable only, option B jointly liable only, option C jointly and severely liable, option D not liable. The correct answer is option C jointly and severely liable. The next question is upon the death of one joint borrower, the existing account should be option A closed immediately, option B ruled off and a new one opened, option C broken, stopped, not closed, option D transferred to a different branch. And the correct answer is option C broken, stopped, not closed. Next question is a sole proprietorship firm is in law option A a separate legal entity, option B no different from the individual who owns it, option C treated as a private limited company, option D register required to be registered with the ROC. The correct answer is option B no different from the individual who owns it. Next question is as per the Companies Act 2013, what is the maximum number of persons allowed in a partnership form for gain? Option A 10, option B 20, option C 50, or option D 100. And the correct answer is option D 100. Next question is why is it advisable for partnership firms with the bank to be registered? Option A it reduces the interest rate on loans. Option B an unregistered firm cannot sue to enforce its right from a contract. Option C registration is mandatory by law. Option D it allows the firm to open more than one account. And the correct answer is option B an unregistered firm cannot sue to enforce its right from a contract. The next question is what document should be obtained for opening a partnership firm's account instead of the partnership deed? Option A a copy of the company's memorandum. Option B the partnership letter form L438. Option C a letter from the charity commissioner. Option D a board resolution. The correct answer is option B the partnership letter form L438. The next question is upon the retirement of a partner, the existing account should be option A closed and the new one opened, option B allowed to operate as before, option C broken, stopped, and operations allowed in a new account, option D transferred to a retiring partner. The correct answer is option C broken, stopped, and operations allowed in a new account. The next question is if a partnership firm has a limited company as a partner, a charge created by the firm on its assets may require registration with option A, the charity commissioner, option B, the registrar of companies, option C, the Reserve Bank of India, or option D, the state government. And the correct answer is option B, the registrar of companies. The next question is a minor can be admitted to the benefits of a partnership firm. What is the key restriction regarding the minor? Option A the minor can sign security documents. Option B the minor's personal assets are liable for firm's acts. Option C the minor can repudiate liability within a specified time after attaining majority. Option D the minor can operate the bank account. And the correct answer is option C. The minor can repudiate liability within a specified time after attaining majority. The next question is a company is defined as a public company if it is option A a private company, option B not a private company, option C a subsidiary of another company, option D having less than 7 shareholders. The correct answer is option B not a private company. The next question is which of the following is not a document required for entertaining an advance proposal to a limited company? Option A certificate of incorporation, option B certificate of commencement of business, option C partnership deed, option D board resolution for borrowing. And the correct answer is option C partnership deed. The next question is as per section 181C of the Companies Act 2013, the board of directors cannot borrow in excess of the company's paid up capital and free reserves without option A the approval of the registrar of companies, option B the consent of the company by a special resolution, option C a letter from the bank, or option D the approval of the managing director. And the correct answer is option B the consent of the company by a special resolution. The next question is according to section 20 of the Banking Regulation Act 1949, a bank cannot grant loans to option A any of its directors, option B government companies, option C public charitable trusts, or option D individuals with a high credit rating. And the correct answer is option A any of its directors. The next question is the term substantial interest in a company as per the Banking Regulation Act means holding a beneficial interest exceeding option A rupees 1 lakh or 5% of paid up capital whichever is less. Option B rupees 5 lakhs or 10% of paid up capital whichever is less. Option C rupees 10 lakhs or 15% of paid up capital whichever is less. Option D rupees 25 lakhs or 20% of paid up capital whichever is less. And the correct answer is option B rupees 5 lakhs or 10% of paid up capital whichever is less. The next question is which of the following transactions is an exception to the prohibitions under section 20 of the Banking Regulation Act? Option A clean loans to a director, option B loans against fixed deposits, option C unsecured overdrafts to a firm where a director is a partner, option D personal loans to a director. And the correct answer is option B loans against fixed deposits. The next question is loans to relatives of the chairman and managing director aggregating over what amount must be put up to the board for sanction. Option A rupees 1 crore, option B rupees 5 crore, option C rupees 10 crores, or option D rupees 25 crores. And the correct answer is option B rupees 5 crores. The next question is for the purpose of advances to relatives, which of the following is not considered a relative? Option A son's wife, option B brother's wife, option C cousin, option D daughter's husband. And the correct answer is option C cousin. The next question is Section 20A of the Banking Regulation Act deals with option A granting new loans, option B remitting debt due, due from directors and connected parties, option C opening new branches, or option D determining interest rates. And the correct answer is option B remitting debts due from directors and connected parties. The next question is before advancing to a limited company, a search of the company's files at the register of companies is necessary to option A check the company's profit history, option B ensure there is no outstanding charge on the proposed security, option C verify the director's educational qualifications, or option D confirm the company's marketing strategy. And the correct answer is option B ensure there is no outstanding charge on the proposed security. The next question is as per the Companies Act 2013, what is the normal time limit for registering a charge with the ROC? Option A 15 days, option B 30 days, option C 60 days, option D 90 days. And the correct answer is option B 30 days. The next question is what is the consequence of failing to register a charge within the prescribed time? Option A the company is fined, option B the charge becomes void against the liquidator and other creditors, option C the loan becomes interest free, option D the bank must immediately recall the advance. And the correct answer is option B the charge becomes void against the liquidator and other creditors. The next question is which form is used for the registration of the creation of a charge under the Companies Act 2013? Option A CHG 4, option B CHG 1, option C MGT 14, option D INC 22. And the correct answer is option B CHG 1. The next question is when the terms of a registered charge are modified, the particulars of modification must be filled within option A 15 days, option B 30 days, option C 45 days, option D 60 days. And the correct answer is option B 30 days. The next question is Form CHG 4 is used for option A creation of a change charge, option B modification of a charge, option C satisfaction of a charge, option D amalgamation of a company. The correct answer is option C satisfaction of a charge. The next question is in case of amalgamation of companies, the transferee company must file particulars of the charge with the ROC within how many days? Option A 15 days, option B 30 days, option C 60 days, or option D 90 days. And the correct answer is option B 30 days. The next question is clean advances are generally granted to borrowers with option A low capital resources, option B undoubted reputation and high capital resources, option C no other banking relationships, option D government backing. And the correct answer is option B undoubted reputation and high capital resources. The next question is the power to borrow monies from a company's board of directors must be exercised through option A a circular resolution, option B a resolution passed at a duly convened board meeting, option C decision by the managing director alone, option D an email approval from all directors. The correct answer is option B a resolution passed at a duly convened board meeting. The next question is the registered office of a limited company is important because option A it is where all legal notices must be served. Option B it is always the most profitable branch. Option C it determines the company's credit rating. Option D it is where daily operations are conducted. The correct answer is option A it is where all legal notices must be served. The next question is a document that defines the objects and powers of a company is the option A partnership deed, option B memorandum of association, option C board resolution, option D trust deed. The correct answer is option B memorandum of association. The next question is a Pardanashi in ladies contract can be avoided on the grounds of option A fraud, option B undue influence, option C lack of consideration, option D being a minor. The correct answer is option B undue influence. The next question is the rule in Clayton's case is relevant in the context of option A determining interest rates, option B appropriation of payments in a running account, option D C registration of charges, option D calculating adequacy. The correct answer is option A appropriation of payments in a running account. The next question is the primary goal of the credit rating exercise is to option A increase the number of loans, option B standardize and uniformly communicate credit judgment, option C reduce paperwork, option D favor long-standing customers. The correct answer is option B standardize and uniformly communicate credit judgment. Thank you very much for your patience. Please to like, share and subscribe to this YouTube channel.